This isn't just another oil story. The United Arab Emirates has just done something almost unthinkable and out of the blue. It is walking out of the Organization of the Petroleum Exporting Countries, OPEC, after nearly 60 years. Not pausing or protesting, just leaving. And this isn't just another policy shift in the oil market. This could be the moment the rules of global oil pricing begin to change.
There have been a lot of compliance issues in OPEC even earlier, which would show that there are, it's not a very cohesive grouping as such or cartel. But of the members within OPEC, UAE used to be one of the more compliant ones, and unlike some countries like Kazakhstan, Libya, etc. So possibly there are some fractures within the the OPEC and OPEC Plus grouping.
To understand why this matters, you need to understand how oil has been controlled. OPEC was formed in 1960 by 5 countries, led by Saudi Arabia, with one goal: control oil supply, control prices. If oil prices fall, cut production. If prices rise too fast, increase supply. The strategy was simple, coordinated, and powerful. At its peak, OPEC controlled around 85% of globally traded oil. Even today, it holds roughly 4/5 of global reserves, which means when OPEC moves, the world feels it.
Over the longer term or in the medium term, if you see, UAE has plans to increase the production capacity to 5 million barrels per day by 2027 and further increase by 2030. So for a country like India, for Asia, for energy hungry countries like India and China and so on, this is a very close source compared to, say, a Guyana, a Brazil, a US, where the freight and the time for transportation is significantly higher. So certainly this would be a plus for India.
But here's the catch. That system only works if every member agrees to hold back, and the UAE doesn't want to anymore. Right now, the UAE produces about 2.9 million barrels per day, but it has invested heavily to produce much more. The problem? OPEC quotas. They capped UAE's production at around 3 to 3.5 million barrels per day, which means the UAE was sitting on unused capacity, losing potential revenue every single day. And that frustration has been building for years.
Historically, they have provided, the production has ranged between 3 to 4 million barrels per day, which would make it about 3% of the global supply, roughly speaking, 3 to 4% of the global supply. So certainly with the UAE's exit, which is, I think, the fourth largest producer in the OPEC grouping, this does dent the power of OPEC and OPEC Plus to manage supplies and therefore impact prices. If you recall, most of FY26 prior to this, Middle East, the West Asia conflict, prices remained almost, at between 60 to 65 per barrel. And when they increased above 70, they stayed there for a very brief time, until unless obviously this geopolitical event happened. So, OPEC had also announced unwinding of the production cuts, right? And increasing their market share. So this is again a step in in that direction, probably, where one of the members is separating out to capture market share.
The oil market itself is changing. For decades, oil demand was predictable as it kept rising. Now, that assumption is breaking. Take China, for example. Electrification of cars, trucks, and even rail has already reduced oil demand by about 1 million barrels a day. And as this trend spreads globally, demand could plateau or even decline. So for oil producers, the calculation is changing. Earlier, it used to be save oil and sell later at higher prices. But increasingly, it is turning into sell as much as possible before demand weakens. And this is where the UAE's decision fits in. Outside OPEC, it can ramp up production freely, not to 3 million or 3.5 million, but potentially 5 million barrels per day, because there are no quotas, no coordination. Hence, no waiting, just scale. Because in a world where oil demand may peak, the winner is not the one who restricts supply, but it's the one who monetizes fastest. But this also creates a dangerous global situation. If the UAE starts pumping more, others may follow, and that could trigger a price war. Saudi Arabia, OPEC's de facto leader, has done this before. Flood the market, crash prices, and force others to fall in line. The UAE might survive that, as its economy is diversified with finance, tourism, and global capital, but smaller OPEC members may find it difficult, which is why some analysts are calling this the beginning of the end of OPEC.
So this does dent the power of OPEC. Now, whether it is each to his own, maybe that will not happen immediately. And when you think on the global terms, global demand supply terms of, how much does 1 million barrel per day addition actually impact prices? They actually can impact a lot. If you recall 2014, when crude oil prices suddenly slumped, that was when once shale oil started making its presence felt, with US production increasing. That was just 1 to 2 million barrels per day that increase happened, and the crude oil prices went down significantly. And then from November 2016, the OPEC Plus started taking those actions of supply cuts, etc. So, may not be immediately or each to his own, but this certainly shows that the members are thinking of now, also increasing their market share. A lot of their dominance has been, in a sense, been or the discipline in supply cuts has been undone by the increase in production from non-OPEC countries like Brazil, like China, like US, like Guyana, and so on. So yeah, we'll have to wait and watch really how things unfold.
There's also geopolitics at play. The move is being seen as a win for Donald Trump, who has repeatedly attacked OPEC for keeping oil prices high and even threatened tariffs. A more independent UAE could align more closely with US interests, especially when Washington wants cheaper oil. At the same time, supply is already under stress. The World Bank says the ongoing West Asian conflict has caused the largest oil supply disruption on record. And in response, the International Energy Agency, which represents oil-consuming nations, has been releasing strategic reserves at an unprecedented scale. So what you are seeing is a tug of war where producers are trying to manage prices and consumers are trying to control costs. And right in the middle, it might appear that OPEC is losing control. OPEC still matters because it still influences prices, it still holds massive reserves, but its dominance has weakened. Its share of globally traded oil has already dropped from around 85% to nearly 50%, and now internal cracks are showing. So this is not just about the UAE leaving OPEC, this is about something deeper. And maybe the biggest shift of all being that the world is no longer certain about the future of oil demand. And when that certainty disappears, so does the incentive to cooperate. So this may not be the end of OPEC, but it could be the end of how OPEC used to work. Follow Business Standard for more such stories.